All right, let's talk about money. But we're not just talking about dollars and cents today. We're going to pull back the curtain on a quiet revolution, one that's been led by central banks, completely rewriting the financial rules for all of us, whether we realized it or not.
Now, I know what you might be thinking. That sounds a little like a movie plot, right? But here's the thing, it's not. The very foundations that govern your savings, your investments, your entire financial life, they've been fundamentally altered. And in this explainer, we're going to break down exactly how it happened, why it's so important, and what it means for you.
Okay, so to really get what's happening now, we have to rewind the clock. We have to start with the old rules. See, for most of modern history, money wasn't just some abstract concept. It was actually tied to something real, something physical that you couldn't just invent out of thin air. And that is a world away from where we are today. We are talking, of course, about the gold standard. In that pre-1971 world, as you can see right here, money was anchored to physical gold. This wasn't just for show. It was a hard limit. A government couldn't just fire up the printing presses whenever it felt like it. It had to have the actual gold in the vault to back up every dollar it created. That's a serious constraint, a constraint that is completely gone today. So let's pinpoint the exact moment everything flipped. It wasn't some huge war or a dramatic market crash that did it. Nope. It was a single decision that quietly but permanently changed the DNA of the entire global financial system. And there it is. President Nixon went on TV and effectively severed the link between the US dollar and gold. And with that one move, the world's most important currency was suddenly floating freely, unattached to anything physical. And pretty soon, every other major currency followed suit. The age of unlimited money had officially begun. So this brought us into the age of what's called fiat money. Now, this definition is crucial. Fiat currency isn't backed by gold or silver or anything tangible. Its value comes from one thing and one thing only: our collective trust and faith in the government that issues it. And with that change, the floodgates for money creation were blown wide open. So, with those old physical limits totally gone, central banks suddenly had a brand new playbook. They could now manage the economy in a way that was never possible before. And the new name of the game wasn't about saving or production, it was all about debt. And this is the new formula, right here in 4 simple steps. First, central banks drop interest rates, making money ridiculously cheap to borrow. So what happens? Everyone, corporations, governments, regular people, starts borrowing like there's no tomorrow. All that new money and debt then floods into the system and pushes up the prices of assets like stocks and real estate. Everybody feels richer, and on paper, the economy looks like it's booming. But here is the catch, and this quote just nails it. For years, this system of easy money seemed to be working perfectly. It created this period of seeming stability that economists called the Great Moderation. But what was really happening under the surface was that risk wasn't being eliminated at all. It was just being delayed, kicked down the road, all while it was secretly growing bigger and bigger. And when you just delay risk, you don't avoid it. You just make the eventual explosion that much bigger. This has created a really powerful and kind of scary repeating cycle. A crisis hits, it's met with an even bigger intervention, and that very intervention just plants the seeds for the next, even bigger crisis. And the first massive test of this new system came in 2008. The financial crisis wasn't just some recession, it was a total meltdown. The entire global financial system was literally seconds from complete collapse. And in response, central banks didn't just cut rates, oh no. They had to unleash a brand new financial bazooka. And that new power was quantitative easing, or QE. It sounds complex, but just think of it like this. A central bank basically has a magic digital checkbook that can never bounce. They use it to create trillions of dollars out of thin air, to buy up bonds and other assets, flooding the system with cash to stop the bleeding. It's an incredibly powerful tool, but it also totally changes the nature of what money is. So, this cycle you see on the screen, this is the loop we've been stuck in ever since. A crisis hits. The central banks fire up the money printers with QE. Asset prices go through the roof, creating this illusion of stability. But eventually, all that new money creates a huge imbalance, like the crazy inflation we all just lived through. That forces them to hike interest rates, which puts enormous strain on all the debt in the system, and that in turn brews the next crisis. We saw it after 2008, and we saw it again, on an even bigger scale, in 2020. And this staggering number is the result.
Over $300 trillion in global debt. It's a financial time bomb sitting at the heart of the system. And it means central banks are now completely trapped. If they lower rates to make the debt affordable, they risk another wave of inflation. But if they raise rates to fight inflation, they risk setting off a catastrophic debt crisis. They're walking on a tightrope.
So, how do you play a game where the rules are constantly being changed by the people in charge? How do you protect yourself and maybe even find opportunities in this new financial world? Well, here are the 3 essential rules for your playbook. First, you have to understand that the rulebook is dynamic. Central bank policy isn't just background noise anymore. It is the single biggest driver of the markets, period. Second, debt is the fuel for this whole system. If you want to know where we are in the cycle, watch credit conditions. And third, and this is maybe the most important takeaway of all, in a world of endless money printing, holding cash long-term is a losing game. It's guaranteed to lose purchasing power over time. Productive assets are your defense. And that leaves us with this final, really big question. If a system needs constant, massive, emergency life support just to keep from collapsing, is it actually stable at all? Or are we all just living on borrowed time? The answer is going to shape all of our financial futures. But one thing is crystal clear. In this new world, the only constant is change. And understanding the game is the absolute best way to prepare.